The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, sometimes a term we like to use is risk on, or at least we like to say that if it's applicable to the markets. And it kind of felt that way on Wednesday, at least in the grain and oilseed trade, with the soy complex taking the leadership baton from the wheat market, which led the way Tuesday. Overall, positive day, more mixed in the livestock sector and some outside market pressure late in the session. Plenty for us to discuss and take a look at here today on the show. Mike Zuzolo, Global Commodity Analytics, joins us for our weekly market talk conversation. Mike, good to have you with us. And hey, we'll take a green on the screen kind of day across that grain and oilseed trade at midweek, won't we?
We will. We'll take a wheat-led market rally for sure, Jesse, right? Because we're now at a point where we've been talking about this for, I think I was in my early 50s when we started talking about this. And but it's nice to see a 6-week high in the wheat market. Wednesday's a little bit different, as you say. Not bad, but a little bit different. Beans did pick it up nicely on a flat price basis. I noticed, though, in the close, the hard red wheat, Minneapolis, and the corn on a percentage basis all still beat the soy complex. We're still struggling a little bit with the meal and with the bean oil and the product markets. We can dig deeper into that. But that wheat market able to find some support with some more momentum trade, I think, being introduced on Wednesday. Sell-off, as you said, on the close. I put that at I didn't see anything new on the Brazilian poultry issue. That's one big feature that we've been contending with this week that I think's kept the lid on some of the row crop markets, especially with that rain coming through the Western Corn Belt or over the weekend and early this week. But also, I think when I saw new lows in the stock market, dollar down 2/3 of a point, bond yields sharply higher on a pretty bad bond auction by the U.S. government. This is, I think, more of a tariff-related sell-off maybe, or profit-taking by longs on Wednesday's close. And the reason I bring that up is because we saw last week the beginnings of this wheat-led rally, and I really think the weekly export sales showing that unknown, very large purchase in new crop wheat got us jump-started, along with that map that you and I talked about last week in these 3 big northern hemisphere hotspots.
Let's talk about that a little bit and weave in this weather conversation again here, because I've been kind of wondering the last several sessions if we're maybe starting to, or at least maybe thinking about putting in some weather premium here, kind of that seasonality type trade that we'll get here around this time frame. And as we kind of look at those 3 hot spots that we touched on last week, I mean, talk about this. Any changes, any thoughts on the weather factor here in the grain market, Mike?
You know, on this drought severity map, excuse me, they have shrunk some, especially for the United States and for Russia. But the damage may be already done in terms of the United States and Russia, and I would even say China's primary wheat belt. And we saw that on the crop conditions drop of 2 points. Not a big drop and not a big deal in terms of national numbers, but when you're talking about a very high yield in a market that was prepared to see no change whatsoever on Monday afternoon's crop progress report, and seeing that 2 percentage point drop after talking to a couple clients and colleagues in central and west central Kansas, the bloom is off of the wheat crop potential at this stage from what I'm hearing. That would match up with the frost damage, freeze damage done in Russia. We're getting a lot of conflicting reports and ideas about how much damage has been done. But I think between the drought and the frost freeze, the top end yields again in Russia and their ability to come in close to last year's crop is pretty limited and pretty unlikely at this point. That is what is spurring, I think, Jesse, your weather premium, as you rightly put it, that's coming to this market. Now, keep in mind, going back to those weekly export sales, Thursday's weekly export sales will be just as important, if not more, in my opinion, than this past week because of the light sell-off on the close. And also we want to feed what could be a burgeoning demand bull coming in on the wheat market, U.S. wheat included. And I think this is really critical because that's typically how these markets, these lows sneak up on you. All of a sudden you're 50 cents off your lows and you're saying, how much more does this thing have? And this is going to be extra tough to deal with the tariff negotiations ongoing. But last thing I'll say is when you look at the weekly export sales on Thursday morning, if we have another good week in the wheat and in the corn, I will feel like that we can go on higher to the upside heading into the long holiday weekend, mainly because we still have these issues around the world, even though we've put away some of the Western Corn Belt drought talk for now.
Well, let's lean a little more into the wheat and this wheat-led rally and the corn complex here as well, and kind of compare the two between SRW and corn futures. We look at some of these charts of the wheat-corn spread, and I'll throw another little nugget out here as well that maybe you could touch on with this, Mike. I know the Kansas Wheat Tour last week, we did get some of those reports of wheat streak virus in there as well, so maybe that's just another added piece of some of this wheat market rally we've seen here recently. But let's talk about all of this and just what you're seeing across the board here with the wheat and tied up with the corn here.
No, I think you hit on the nose with the U.S. and kind of what I was alluding to in the previous comments. One of the colleagues I spoke with said that wheat tour essentially went from 85 to 15, great to terrible. And part of it was drought, part of it was the mosaic. And that's not good because this past week has been more the same for the most part, and the next 5-7 days doesn't look very good for wheat potential as far as rain, and it looks very, very cool. And I don't think the mosaic really likes that type of weather. So I think the wheat producers are now in Kansas starting to be nervous that the best is behind them as far as yield potential. This chart, I think, really is helpful in understanding what's happening in this market as it pertains to the spreads. You know, I talked about the July D's corn spread last week. That's still very much on the top end of my list to be watching as leading indicators. July has not gained on December. It's essentially gone flat, maintaining a 5, 6, maybe 7 cent premium, but getting, too close to that zero number again. I think there's a reason for it. I think it has to do with the wheat premium against the corn premium. As you notice, about 4 or 5 weeks ago, at the beginning of April, this wheat corn spread, purple is wheat, corn is in the white line, and then the yellow line is the actual spread. That spread nosedived around the 1st of April to about 45, 46 cents, soft red wheat premium to corn. So you could see the funds were really spreading hard, long corn, short wheat. I think we're unwinding that spread, and we've actually doubled the spread number now. We got up to 92 cents on Tuesday afternoon's close in that wheat corn spread, and that would indicate, okay, the funds are short covering their wheat, maybe holding on to their corn a little bit more. I think that's construing and causing the July D's corn spread to be out of whack right now. So next week at this time after the holiday, especially given the ethanol numbers, I'd really like to see that July start to pick up the leadership role again, because the demand, the tightness of supplies, and we still don't know what's going to happen in Argentina with their unbelievable Buenos Aires flooding that they got over the weekend. And my South American colleague is telling me that, the trade is aware of aware of beans, but beans are 60% harvested, whereas corn's only 40% harvested. So I'm not giving up on South America yet to give us kind of a supply surprise.
Give me some thoughts here. You mentioned July corn. Let's talk about the July corn complex as well. I know I've heard some chatter. Some folks are getting offered a basis premium right now, or at least a zero basis. I mean, so maybe some old crop corn still going to move out there at the countryside. I mean, what are you watching as you look at July corn right now?
Well, with the wheat rally, Jesse, as we talked about, we really needed corn to follow along because corn fundamentals are so much stronger than wheat. And my argument and idea was wheat is holding corn down. So far, so good. And this July chart shows us now that July futures is lead month futures, not only did we take out the downtrending white line, not only did we take out the short-term moving average in yellow, now with today's or Wednesday's close in the July futures of 460, we finished pretty much right on the purple resistance line, just a hair above it, because these charts that you're seeing are all before the market closed on Wednesday. And I think the ethanol data helped, but I think quite honestly, we should have never gone below the March, April lows, especially after USDA gave us those WASDE report numbers. And so my take was the last 2 weeks of trade, ever since we've gone below the late March, early April lows of that 450 level, all of that, or almost all of that, was due to the wheat market. We should not have to look back on that now, especially if the wheat keeps rallying. So what I'm saying to clients and subscribers is we don't want to have to close below 450 in July wheat at all at this point. Otherwise, we're going to have some issues, I think, because this should be a hard low. And that May, as you said in the top of the show, the May seasonality, once May goes off the board in wheat especially, you either make a low in wheat or you're going to have to wait till wheat harvest. So we want to call this a low at this point.
Let's continue the conversation here. We are talking with Mike Zuzolo from Global Commodity Analytics. Looking at the ethanol numbers, Mike, walk us through some of what we saw here when it came to stocks and production at midweek Wednesday.
Well, the average gasoline price, while it's down versus last year heading into summer driving season, it's still a bit high if you ask me. We do have a relatively tight supply of unleaded, and so that explains some of it, but that also would help explain why the ethanol demand would be good at this point, given prices are a little bit higher and the actual unleaded stocks, RBOB stocks, are a little bit low. This is where I hope Wednesday's production and stocks figure, sharply higher production, sharply lower stocks, and the stocks figure in orange, getting down the lowest levels since the brand new 2025 low, essentially. And that's what we want to keep seeing as we get into the summer driving season. And so we got really good ethanol numbers. And as you know, many in the trade, including myself, have been a little bit nervous about whether the biofuel, especially the ethanol, and even the sustainable aviation fuel for biofuel on the soybean oil side, it was going to perform domestically and help offset any losses in demand that we would face in the export front. This was good fundamental news on Wednesday by the Department of Energy. So I think that helped the July corn get back up above 460 and break through that other trend line. That then opens us up now to the potential of 485 area for the next resistance level for lean month corn, and then ultimately a little bit over $5. I think you get above $5 in the futures market. If basis holds together and stays at zero, that's probably going to be, I would guess, the top end, unless we find out some more news about what's going on with Ukraine or with China's wheat belt that we don't realize is going to happen. Or we see USDA and some of the South American analysts come in and say there is a world of hurt in Argentina and Mato Grosso is turned hot and dry. That second crop corn isn't going to be a 112 or 111. We're going to have to shave it back down to 105, 107, something like that.
Let's go over to soy, and you mentioned, SAF, 45Z. We also got RVS or RFS and the renewable volume obligations, the RVOs. And I think that's something we need to talk about here in this soy conversation, along with looking at the products that you mentioned earlier in the show as well. We're kind of struggling there, but more chatter again that we could see the RVO levels out from EPA by the holiday weekend. Yet, just last week, there was talk that we wouldn't see those till later this year. So maybe, some of that buy the rumor in the trade again here this week. But all that aside, to your point as well, we are still kind of struggling in some of these products here. So, walk me through your thoughts in this soy complex, Mike.
Yeah, great way to set it up. You're right on the money as usual with the RVO and what we're going to do with 45Z and all that sustainable aviation fuel. In this monthly chart where I overlaid bean oil as the white line against the meal bar chart, you see very clearly we've got a premium in that bean oil market. I think exactly because of what you're saying. We've taken some out, but not a lot when you look at it from a standpoint of the end of the last year and the first of this year. And when you look at since 2025 started, you have not come off the floor in terms of meal, and you've had a really nice pickup and short covering rally and what looks to be like a rounded bottom in the soybean oil, especially since we've been able to get back up above those 2023 lows, right above where the word soybean oil is. And so this chart says to me, we're on the right track. If we really want the beans to find support and find some upside potential that can be lasting, we need that meal market to find some short covering. This would also be logical and make sense too, Jesse, because the funds are so heavily net short the meal. I think they're over 100,000 contracts, futures, and options at this point, close to their old record high, I should say, net short. This is a chart that would suggest to me, and this is what, again, I'm telling clients and subscribers for the next week or two, if Argentina's flooding problems are as bad as I'm hearing from some sectors, some areas, that it can overall cut production as the number one meal exporter in the world, you would think that the meal market would find a lot of potential short covering on that news. And so I think the next big domino that I think needs to fall to keep the wheat, corn, and bean markets going higher and keep the funds on their defensive with this weak dollar trade is a strong Brazilian currency, strong Chinese currency. And then all of a sudden we have problems in Argentina's meal ability to produce and export, and that meal market wakes up once and for all. But you look at this monthly chart and you're talking about 6-7 months of not really doing anything but just languishing on the floor. And that floor goes all the way back to the 2020 lows. So we are cheap in the meal market. We should be encouraging feeding on the meal side at this point.
And I'll just say real quick before we go over to livestock, why am I getting a bit of a gut feeling? And this is, off of nothing I have heard from anyone, but why am I getting a bit of a gut feeling we could see a late Friday news dump ahead of a holiday weekend in terms of these RVOs, Mike? I mean, we've seen it before, haven't we?
I think that's exactly right. And it would make sense because the tariff negotiations aren't going the way they should be going right now at this point. And a lot will depend upon whether the Congress gets the big, beautiful bill passed. That's a lot of it. And one thing that I have to address today that I wasn't expecting, London Times broke it and CNN broke it, but I always like it when a foreign newspaper breaks news that the Israelis may be ramping up for an airstrike against Iran. That would suggest to me, along with this Golden Dome, the Iranian negotiations aren't going so well. And so I'm putting a lot out there. I'm putting a lot of pieces where they may not fit, Jesse, but that's what we do in this commodity world that we live in if we're an analyst or a researcher. And so I think the crude oil market and those product markets, along with that policy, really have to be watched very closely.
And here I am going and stir the pot and throwing out the idea of a rumor. Maybe we'll see some news ahead of the holiday weekend. All right, let's talk livestock to wrap up here today. Walk us through this chart, looking at a couple different things here. The beef loin price, the live cattle weekly, the choice round. What exactly are you tracking when you look at this?
Yeah, this is the freebie look. Get a trial, get a subscription. You'll get a lot more information. I just put out a new newsletter on the crude oil and on the cattle. Big picture stuff for the next 6 months. But this is one of the several metrics, leading indicator metrics, I'm utilizing to help me figure out how quickly demand destruction is occurring in the beef market. Why am I bringing that up? Because simply put, when you take prices to historic highs and it's led by the cash market, you're doing two things. You're trying to cut demand off at the legs, and you're trying to encourage the supply side. The supply side is being encouraged. We've got USDA now, after last week, agreeing with me, agreeing with Tyson that heifers are being retained. So half of the deal has been accomplished of these high prices. And if you look at the fat cattle price up there at that 217, 218, 219 level, look how much higher we are than we were back in 2014, 2015. So the next shoe to drop is the demand side of the equation and demand destruction. And can we get the fats back to that 218.63 record high in this June contract when boxed beef prices are still going sky high, but seasonally they really kind of fall apart right after the Memorial Day holiday? That's where these cuts really come into place. When I saw Kansas City steak prices at a major grocery store at $20 a pound for choice strips, that got me thinking, okay, where are we at on beef loin price? Well, we're up there at levels not seen since 2021, 2022, that time period when we had that issue with the COVID pandemic and the ability to get meat to the right place and the extra buying that was going on, the extra demand that was going on to fill freezers. How about the round price, the choice round price? Not yet near where we were back in 2020, but it is starting to get close to the old highs from the last 5 years, roughly, of that last year in 2024. And I bring this up, Jesse, because We also have a cattle on feed report, and the placements are expected to be around 97%. This is the big disconnect in the cattle market, and I'm hearing it more and more. Ranchers are telling me that the cattle are not out there in the pens, that USDA's numbers are wrong. Well, USDA just said last week, look, on feed numbers over 150 days as a percentage and outright are the highest level since June of 2020. So something's going to have to give here, I think, in the next 30 to 45 days. Do we have those animals or do we not? And if these beef prices keep going higher here in the early part of summer, it helps support what I've been talking about with you for several weeks now. I really fear the summer grilling season for beef is not going to be the best. That screwworm issues push the market higher. And now we've got the issue with the Brazilian poultry. You know, Brazil's 35% of the world production export market of poultry for all of the world. And so you've had these things come in and feed the bull, but how much more can the U.S. consumer take?
And it begs the question of whether or not we maybe have a short-term top in here or a top in general in this cattle market. And Mike, we could spend an hour talking about that, but I think we should leave it there. And I know you have a lot of great analysis about everything, cattle trade, commodities, and more, all available on your website, right, Mike?
Yeah, globalcomresearch.com. Please pick up a 2-week free trial. You won't get everything, but give me a call if you want to see everything, and I'll put you on a short-term trial that's very affordable and inexpensive. So globalcom with 2M's research.com.
Mike Zuzolo, Global Commodity Analytics. Always a pleasure, sir. Thanks for joining us. Have a great weekend. We'll talk to you next week.
Thanks, Jesse, and thanks to all the veterans, and we remember all of our lost ones.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.